All right, so we'll just do a quick, weekly analysis, and then we'll just like jump into some live tape reading. If you guys have any questions, and you just obviously let me know at any time, I'll do my best to help out and answer those. If anybody specifically wants, anything to be covered, like this is a great time to talk about it. Be happy to answer again any questions. I'll write them all down on the screen, and we'll get right into it. So. What's up, Panos? Hope you're having a great day as well. Jason, good morning. I appreciate everyone saying good morning today. It means a lot to me. So, yeah, we'll get right into it. All right. All right, so on my screen right now is basically the 30-second opening range. I have basically toggled the last 3 days right here on the extend opening ranges. It's basically just going to give me a framework of how I can see how price is going to move from range to range. So that's very insightful to me, right? Automatically, I can see that, S&P right out the gate is pretty much trading above all of its 3 ORs. And right now, you see that NASDAQ is basically trading into, this is Wednesday's OR. We do have a little bit of overhead over here. And then you can see in ES, there's a lot more space from here to here. So right away, I think ES is going to be a little bit more free, let's call it today, to move. But we'll get into the weekly analysis right away. So you guys kind of know how I've done this before, but we'll kind of just go right into it and just break it down. So clearly, all the way down from here, back up, this is a whole market maker buy model. So this range right here, if you've not watched the market maker buy model or market maker model YouTube, then I would definitely suggest taking a look at that. I encourage you to take a look. I think it's pretty good. Basically, after this whole consolidation range, we've just seen every single week either raid the previous weekly low and continue order flow, and or just press higher. So you can see down close candles, they are still supporting price here. We have fair value gaps that are being sponsored, right? Down close candles. So last week, all we really did is just trade into this October opening price and also rated weekly lows, right? If you go over here, you could also see we respected the mean threshold of this body, right? So that's still good. And we also have a volume balance here with fair value gap. So all of this is basically there, okay? I can go over here and add the midline. This is going to be very important for the weekly candle right here. As long as we stay above this midpoint, I'm going to still look for longs, right? So on a higher time frame basis, you can see that every weekly open, we're basically just trading lower and accumulating to then trade higher. So very easy top-down analysis as of right now. We do have this gap right here, which was basically created on that new week opening gap. So I'm going to mark this out. I'm going to label it Good Morning Abish. And then this is going to be blue. I'm going to reduce the opacity a little bit. And this is going to be our, let's see. I'm going to make an array here so you guys can see that basically just marking out. It's an order block open in the weekly chart. So we trade into this order block. This probably will be an upside target for this week. I'm just going to be watching this as well. So this is kind of our like dealing range on the week. And I'm just going to go ahead and label this correctly as well. All right. Does anyone have any questions based off of what they see right here? Very simple. Nothing crazy. Just marking out basically the last 3 weeks PD arrays. Questions before we add to the daily chart? Going once, going twice, 3 times. All right. So basically you can see these levels transpose onto the daily chart. when we were on live stream in the elite chat last week, I mentioned that this was going to be a target at 804. This was that daily sell side liquidity pool. And you can see that we basically ran that, respected that large down close candle mean threshold, which again I can annotate again here. So you can see that we rated daily sell side, respected the mean threshold, and basically had a wick higher. If you add some of the indicators that we have, you'll see that again there is a daily IFEG that got triggered right here. And I will go ahead and go like this so you can see this. So you can see that. And this was basically that mechanical target, right? So that was a pretty nice setup. On the indicator itself, you can see that this happened literally right here again. So this is just basically a fractal delivery of what just happened. So on the daily time frame, when then this does pan out, like you can see that this basically triggered, but the moment that happened, we've already kind of went over and started respecting order flow. So it's still gonna fail, but on a mechanical target, you can see it right here. Look at the difference. The daily sell side, and see how we're closing through that daily sell side. We have a fair value gap right there, sponsors again, and then order flow just starts holding, right? So you can distinctly see the difference of a setup like this, a setup like this, when it fails, and right here, right? So if anyone has that tool, definitely pay attention to that to the daily chart. It's going to be assisting your higher time frame narrative, right? So you can see that once we go below the candle that basically confirms the IFEG, then we have a nice, beautiful retest right here, and price just basically goes lower. So as a daily line in the sand, same way that we're looking at this order block open on the weekly, you can see that there's basically an order block on the daily. So today, basically want to invalidate the 50% of this or show signs of respect here to then have further continuation, maybe trade inside of this wick. So let me know if I'm going too fast for anybody, or if anybody has any questions. Kind of just doing a higher time frame analysis, and let me know you guys are with me. So just grabbing a sip of water. All right, awesome. So nobody has any questions based off what they see so far. So again, this is our weekly open. So I go to the OHLC stat map. Easy way to do this. Go into the weekly chart. And I also want to annotate my open. So I'm just going to get rid of that for right now. And you guys can see right here that this is my weekly open. And for the label, let's see. There we go. Okay. I'm gonna do current bar. So you guys can see this is basically the weekly open. Very important. I talk about it all the time. If we're above the weekly open, and we're generally above the 30-second opening range, that's my short-term bias on the day. So you guys can see now with basically the weekly open, which will be here. It's loading up. And then we'll put on basically the 30-second opening ranges. And you'll see that if we're above this and the previous day and or the current day, then I want to generally look for longs, generally. So you can also see on the hourly chart how the IFEG tool is putting in a decent amount of work, right? This is a beautiful setup right here. Look, the body's respecting this. And then you can see the difference between a very small IFEG here, not necessarily so much of a displacement, much larger. You can always filter those over here to IFEG threshold. So if you want to do like small, medium, and large, these are going to go away. See? So that's just a cool, interesting feature, if you would. So right now we're just basically hanging out of this daily order block open and basically just waiting for 9:30. We have this one layout that I really like to take a look at all the time. For people that have been in the past streams, you know that I've talked a lot about session liquidity and how I view that. So right away, what do you guys notice on these 4 charts? It's a very key point. Does anyone notice anything? Specifically just about this. What do we notice? We'll give XP for anyone that can get this correct, because everyone should be able to get this. We talked about this a lot of different times. What do you guys notice about Asia, London, liquidity pools? There you go. Joe, shout out to you. I'm gonna give you some XP. And what's significant about that, Joe? Have you watched any of the previous live streams when I talk about SMT macros? First live stream, awesome. All right, so drop a 1 if you didn't know that that was basically occurring. Like, let me know if you guys have any questions about why I'm noticing that specifically. Because if majority of people didn't write that, then just be honest with yourself and just ask some questions. I'm happy to go over it again. Mario, appreciate the honesty. Who else is curious, again, why that's influential? Okay. So everyone that's dropping a 1, I did do a previous live stream talking about SMT macros. All right. And I did let you guys know pretty specifically about what I like to look for. Yeah, if you don't know the answer, I'll point it out right now. So you see there's Asia right here, and then there's London. So these are time-based liquidities, right? So time-based liquidities, you guys can see if you go to your liquidity depth, you just type 1 setup for life here on the type, and you can hover over this and you can see the times that are right here on the bottom when I hover over it. So Asia, basically 8 to midnight, 2 to 5 for London, 9:30 to 12 for AM, 12 to 1:30 for the lunch, and New York PM 1:30 to close. So those are the ICT 1 setup for life, basically timings for session liquidity. And I look at this all the time, right? So if that makes sense, then let me know. These are just, again, very specific sessions that we look at inside of market, specifically for index futures, and how we interact with these specific liquidity pools is going to be very influential, right? So yeah, it's the same as any type of other SMTs. You're just looking at the specific time-based liquidity pools. That's the whole point of it, is that they're time-based. So they're not always, 4-hour ranges, like London's only 3 hours, but the same type of narrative applies, right? So yeah, Randy, you can see my chart. Basically, you can see type 1 setup for life is basically on the liquidity pool. So you just go over here. You can do candle, custom sessions, 1 setup for life. And these are Poison's unique sessions. So that's another topic in its own. But right now, you guys can clearly see that I'm just on 1 setup for life. This is the info tip, so you can see the times yourself. And yeah, I just plotted on a quad box, which is what we really have right here. Just go to NASDAQ so you can see. And you guys can clearly see that, look, Asia forms right here from 12 to midnight, right? And look at the Asia low and the Asia high, right? Asia low, Asia high, Asia low, Asia high, Asia low, Asia high. So automatically, you guys can see that when S&P, NASDAQ, Dow, and Russell all have the same time-based reference points, when we look to raid a session liquidity, that's when we're going to basically get into what happens at those times, right? So on a very, very, let's call it simple approach, right? Is that when you see a specific asset raid a session liquidity pool, there's going to be basically two things you're going to see. You're basically going to say, okay, well, there's going to be a raid right here, or there's going to be sponsorship, right? So sponsorship, right? So on the pair that raids it, what's going to be influential is basically a subsequent raid after the SMT, right? And I've already talked about this previously. So when you have the pair looking like this, basically any kind of short-term raid of sell side, which kind of happens right here, this is going to be the influential, deciding factor of when you're going to see this basically get in sync, right? So on pairs that basically create a higher low, you're basically just looking for imbalances to support price, right? So if you have a nice imbalance right here, you also have a 15-minute one. You can probably see a little bit better. So there's this imbalance in here, and then this is just what gets recapitalized right here. Okay. And look, same thing applies here, right? You go and see the imbalance. There should be one. Let's say 5-minute again. So there's no immediate sponsorship here on the 5-minute for S&P or the 15-minute. You guys can clearly see that there will be an inversion here. So if I were to go over here and tag on the inversion, you can see through narrative that this would be detected. So see that? So it's about knowing when they're going to form, right? And look, Asia, it's detecting two bearish setups here, but there's no basically SMT or narrative of why you would basically look to take that. So this is when you can also toggle on your specific bullish and bearish. So you can see that there's templates that I've created here. So I just basically do a blue dot or a red dot for some specific templates. I can show you how to do that. So if you go over here into the indicator, and you see how you have the bias right here. So neutral, bullish, and bearish. So once you have a template that you like, let's say you want to do bullish, all you would do is put that on your chart, and then you go to the templates right here, and you would just save the indicator template, right? And then if you save the indicator template, basically just putting a emoji or a symbol for like a red circle or something, and then from there you could just toggle between them, and then it would be really easy to do that. So that's like a really cool, unique feature, and I personally think that's really helpful. So this is a very mechanical, strength-based setup, right? So you can see that basically we have higher low sponsorship, and then you'd see basically the same thing that'll appear right here. So this is just blending the tools together and understanding the proper narrative of what it is that you're looking at, right? So you guys can see that this setup gets detected, right? So I don't have any questions based off of this. So you can see that the strength pair right here with the higher low relative to Asia, this is where a mechanical model, again, can blend with the right context to then say, okay, well, this is right here. It's leading with strength because it's not taking out the Asia low, right? Or the Asia low. And you can see it's recapitalizing in imbalance, and then it's also inverting, right? So this is a beautiful setup. Same thing in reverse here. So I'm going to take out the bullish only, and you can see that there's a bearish one here, right? So you can see right at this timestamp, look, 540. What happens here? Dow Jones takes out London. London's not taken out. London's not taken out. What do we have? Mechanical inversion. Is that clear to everyone? Awesome. So on the pair that does make that low and it raids that low, again, all I'm looking for is a subsequent raid. So subsequent raid, you can also have another inversion that pops up here. Let's just take that. And you guys can see that on a mechanical basis. See that pops up right here. Also a wonderful setup, right? So after the raid right here, also you can raid this liquidity. This is also a beautiful expansion. And the same thing, look, if London high gets rated, right? There's no real imbalance here. It gets rated one more times, offset distribution. And look, IVG, beautiful delivery. So this is how, again, you're blending a lot of different things into the market with the right narratives. Because if you're just looking at specific setups that get taken without the right narratives, then you're just pattern trading, right? And you know, although there's higher probability patterns out there, you want to have a lot more narrative in what you're looking at. So it just makes more sense, right? So when you guys see my charts like this, and let me just remove this. Without even looking at, you know, putting on IVG tools, you guys can already see from a mechanical basis, just putting out your session liquidity, you can now see that this is going to start to stare out to you, right? This is going to be the pair that rates HLO first. What do I want to see? I want to see a subsequent raid, and then I want to see some sort of sign that's going to tell me, okay, well, this is going to be sponsored. There's going to be SMT here. Same thing here, right? So when you guys look at like a pair like this, like when you look at all of them together, it's going to really give you that higher time frame narrative, right? So the second thing I do want to talk about is this. So we'll go back over here. What do you guys notice about the gap? I'm glad you found that was insightful, you Bade. That's awesome. What do you guys see insightful here? You see the weekly open? What's staring at the charts? Who wants to get more XP? What is insightful about this? There you go, Mario. You got it right. Yep. So you got an SMT fill, right? So right out the gate, see how this one, this pair, NASDAQ, S&P, and Russell, see how they're all leaving a gap open? Dow Jones didn't. So out the gate, you already could have already anticipated that this was going to rate Asia low. So do you see how this is also even giving you a context clue about saying, okay, well, we already filled the gap first on Dow. So as a comparison, it's already weaker, right? So if you're already trading during London Open to rate Asia low, like this would already give me more confidence to say that Asia low would be ran on this specific pair, right? So does that make a little bit more sense too? Because we're blending, right? So you can see that this new day opening gap, again, is clearly being annotated, right? Here, I mean, I could draw it, but you guys can see it visually. We're filling it first on Dow, so I'm already anticipating if we fill the new day opening gap first, then Asia low is likely going to be a hotter target on the pair that's weaker in filling the gap. Does that make sense? Let me know if that makes sense. It's been really interactive today. I appreciate all of you guys. Awesome. For anyone that didn't notice that immediately, can you know, draw some sort of insights of why that is insightful, right? Anybody would like for that to be known? All right. So not only, again, do you have the fill right here, see that we have basically that higher low, the lower low, higher low, higher low. So this was really influential. And if you get into even a little bit more granular detail, you can see perfectly that 50% basically just gets tagged. And that's something that you do want to see. Look at the body's respect, right? Remember, you can see the body disrespecting the 50%. It's going to be here, and then price is going to trade. So does that give an overall narrative to what you guys are seeing that's already happened, right? And then you guys can see some insights on what I would be looking for also. Like right now you can see that the Russell is really trading well above its London high, right? And the London high for ES and NASDAQ have still not been taken, right? We've mentioned this on prior streams as well, and I keep telling you guys that it's going to happen over and over, but when you have the daily open, you basically have like a one-directional expansion, right? There's going to be one pair during the New York Open today that's going to basically look to retest the daily open, in this case also the weekly open. So during 9:30, I'm going to be watching this level right here, and to see which pair wants to basically tip its hands to basically say, okay, well, one of them wants going to retest that weekly open during the New York session. So what I mean that it's literally by 9:30, again, one of them is going to come back and test this, right? We've already taken the liquidity here on London, right? Then any type of inversion that we can get here would then look to target us to the weekly open, right? The same thing here. Again, if we look to raid London, then I want to see, does the London low gets like basically held into the market? And if not, then again, you're just going to look to just follow order flow. And I'm just going to be watching the price signatures that we're getting. And until we have a defining price signature, then kind of just stay patient. So that is that's pretty much the overview. And I can look to turn on the weekly models, and you can see here is that for this model we already have distribution here and here, so I already have like mechanical targets as well. And you can see that Russell is probably going to reach its mechanical distribution up here, time-based distribution. So there's a very much clearer picture for Russell to trade at least to 76 for the open, as opposed to just look to trade all the way to the weekly open. So I'll be monitoring this. So if we have no manipulation to the downside after daily open and price runs higher, we can anticipate price retracing to the opening price later during New York. And that's particular to the weaker pair. Yep, that's generally an idea I like to look at, right? I don't like to force it, because if you have still like one directional days that are just going to be very strong, you don't want to force that. But that's just a price signature that I do like to look at when we do have these type of daily profiles. Yeah, so I literally just mentioned that, Randy. Just answering the previous question. This is just a framework that I like to look at. Doesn't mean that I have to force it, right? Because forcing anything in price, like I don't make the market, right? I'm just an observer, right? So that's what's like I agree with what you're saying. It could very well just keep going, but I want to see price signatures that'll tell me otherwise. So no, perfect. You guys are both thinking the same question as basically we're talking about it, so that just shows some synergy. All right. Yeah, so we're basically just gonna look at this open. We'll see what happens. Does anybody have any questions in the next 2 minutes? Otherwise, we're just gonna look to tape read the open and go from there. Has it been insightful so you guys can see like how we break down each of the sections leading up to New York and just gaining an understanding of narrative and perspective? What looks to be the weaker pairs, time-based liquidity, SMT, the new day opening gap. Like there's a lot of good things that you could see there again. So like trade number one that you could already see is 50% of this with SMT, right? That's a potential trade on Asia. the rebalancing right here with the inversion on NASDAQ, that's another trade. The London SMT right here on ES, clear displacement, we saw that as well. So there's like, what is that? Multiple trades that have a lot of contextual narrative on why they would be influential to me and what I would potentially look for depending on what session you were going to be trading. So yeah, let's see. We have basically NASDAQ coming in. So we're going to be opening up in 15 seconds, and you see how we're basically opening up inside of this 30-second opening range. So again, we kind of already talked about this, but ES looks a little bit more freer to be moved. See how we're opening above it? So I do anticipate there's going to be a little bit more freedom for ES to trade rather than NASDAQ. And you can see already there's a little bit more of an opening right here that's going to be going lower. And this is kind of influential that you'll see is that these two opening ranges are stacked. So let's see how ES wants to basically either look to take out London high. Basically, it'd be invalidated in that concept below these lows. So that'd be like the first, let's call it objective that I would look to see. So yeah, take it slow. Don't need to rush. Markets just opened up. So we have London high right here. So London high just got tagged. ES tagged its London high. So mechanically, if I looked at both of them, I would still favor the opening range breakout on the S&P, only again because we're opening above the previous 30-second opening range. This, again, even though it happened, mechanically speaking, this looked like contextually nicer. So does everyone understand why I'm looking at this in relative to this and why this one looked cleaner to me on the opening? I also had a bullish fractal model opening up right at 9:30. You can see that right here. So see how we took London high. It's interesting that Russell is retracing from that. Someone said no, they don't understand why. I was looking at the S&P to be stronger. Because again, look how we opened up here. And look how we're basically opened up right here. So NASDAQ opened within its 30-second opening range, right? And you can see that we opened up above the previous 30-second opening range. Is that a little bit more clear? Tee off. So I'm already favoring the S&P instead of NASDAQ. So let's see how order flow continues. But the bullish fractal model, very nice. You have your low here, gets rated, changes to delivery, takes out market structure, recapitalizes, raids again. So now we have high resistance lows, and then basically 9:30. which takes out London. So that's actually a beautiful depiction of the fractal model right at 9:30. And you can see ES as well. This is a beautiful lower time frame market maker model. You have fractal consolidations, sell side of the curve, and then you have basically the T-spot that opens up here. They have order pairing, and then price just runs up and hits its standard deviation target right above the London high. Pretty awesome, honestly. Pretty awesome. So Dow is basically looking to take out its current daily high. And truth be told, I wouldn't have expected this to basically pan out, but it did. But on a strength basis, ES and NASDAQ were way cleaner, in my opinion, to the upside than looking at the Dow. And Russell, again, kind of did a lot of damage over the London high. And basically just seeing this retracement right here, I wouldn't have anticipated that to happen either. So you guys can see that regardless of, again, what your anticipations are, you want to look at live price signatures, and that's going to give you a lot more information. So yeah, just basically wait and see. I mean, if we're looking at potential targets on NASDAQ, anything at 684 to 54 could be a volatility target. And then on S&P, basically 38. And where that gets invalidated for me is basically the 30-second opening range. If we close below here and here, then I would relax any upside targets. And kind of just chill, relax. Does anyone else have any questions right now? It looks like everyone's looking at their live price, so it's a little bit less people that are looking at chat, but yeah. If this was insightful to you and you have a couple of seconds to let me know, then that'd be awesome. Awesome. And you guys can see how I blended all the tools of the Elite collection, my specific ones that I like a lot, and automated a lot of the analysis. I just do a top-down analysis manually because that's something that I believe is just easy to do. But yeah, look how much freer, in my opinion, NASDAQ is relative to ES. Like, this is just very clear. It's free to move, right? And you can see that basically you have that clean break above both of them of the opening ranges here, but this was very clear to me, extremely clear. So if I look at the next opening range, is all the way up here. So if you were to go like this, like 48 is something that could be easily of target. And again, invalidate that logic if we basically close below 11 to 13. You just have to wait. and see what happens. So NASDAQ already hit its first objective, basically the distance between these two at 608. And again, there's a lot more space for ES. That's a beautiful fractal model delivery. Beautiful. Yeah, we can pull up a stat map. Let's pull up the stat map. Yeah, we can say that price will be overextended if it gets above the daily distribution. But again, I would never go and say, okay, well, if we're trading above this here, like I would never look to really take shorts there, typically. Like this would just be a fulfilled range for me. I don't like picking the tops on bullish days. Doesn't make sense to me. So yeah, first target for statistical would be on 37 on ES. Got a question about 4 hour. Yeah, this high right here is basically in line with that distribution. So that could be definitely a target. Where are we at here? And you guys can see that there's basically all this delivery. So you have up close candles resisting price, up close candles resisting price. They look to break this low, up close candles resisting price, up close candles resisting price with a sweep, and then this is the first sign of a mechanical break of order flow right here. So you guys know that we've talked about this price signature a lot before, which is basically there's a high and there's a higher, like the high and then the higher high. So this rejection block would also be one of my first targets. And look how that aligns pretty much right there with the distribution start. And this is that rejection block right here. Yeah, so there's not really a lot more that I can talk about. I don't really necessarily want to just start adding stuff when it's not necessarily there. And hopefully you guys can respect that. We had a very clean run from 9:30, right? And we're coming up to the first 15 minutes of the day. And I would already say that if you're looking at a fractal model, change state delivery, subsequent raid, reaccumulation right here. Look how we break above the 2.5, the body closure, then reaccumulate within that range. Look to target 4. We hit 4. And is when we rebalanced, right? And then we also have a clear displacement through this, which already signals that order flow just wants to be monitored. Yeah, it's a good point, Tony. We do have the market. Isn't what's the holiday tomorrow? If you don't mind me asking, I can look it up, but yeah, it seems like you're on top of it already as well. I'm sure somebody knows. Veterans Day. Shout out to all the veterans. Appreciate you keeping our country safe. Much love and respect. Yeah, it's pretty beautiful delivery. Cannot lie. Good morning, Forged. Wishing all well. What is it, 650? I mean, it's kind of gorgeous delivery. I can't lie. Pretty nice delivery. Hmm. Got it, Keith. Makes sense. Well, I'm happy to answer any more questions, but we basically gave the entire narrative of the day. Very clearly outlining that London High was going to be looked to be a target. The weekly open return during US Open didn't happen, right? So we can always be monitoring that. But again, the price signatures are going to favor the overall framework, right? Live price signatures. And again, this was already my telling sign that London high on ES was going to be ran. And if that get ran with any speed, then clearly there's upside. Does anybody else have any questions? It's been a short 45-minute stream, but very insightful, in my opinion. So, awesome. Do you guys also see that, like, fishing for your, like, on your own is going to be a lot better than me just going over there and just saying, like, oh, here's a potential entry or exit? Like, it's much easier for you guys to just develop your own framework, and then you can look to have way more confidence with yourself instead of just blindly trusting. So hopefully you guys can appreciate that on stream. You know, that's something that I've always wanted to make sure is very known. Like, there's a lot of people out there that stream and they'll just click a button in front of you, and if they don't really explain to you fully why they're doing that, then you're not really learning. So, all right. If there's no other questions, pretty much just gonna look to end it here. I really am willing to answer any questions you guys have, specifically about the tools, or live price or price signatures, anything ICT related. Just don't be shy. Here to help. So NASDAQ just hit the middle of this stat map. And we got, what is this? And basically 1 point away from the S&P target. which is kind of interesting. With price being one-sided already, how do you play 930? So again, not financial advice. The 30-second opening range would probably be the cleanest way to engage. So basically looking at that 30-second opening range break and then basically invalidating myself with a closure below there. So like, what you have? 8 points of potential risk for 16. So nice 2-to-1. And that's how this would have been, in my opinion. This was the cleanest 930 trade out of any of them. And that's what I would have seen. See, these little small imperfections of price are sometimes things that I can personally get tripped up on. Like if I look to see like my targets right here and we stop right here, like on 7 points in the NASDAQ, like that can happen very, very quickly. And the same thing here with like 1 point here. Those are just things you're just gonna have to contend with in life. Yeah, we have a 30-second opening range tool. It's an XP tool. And if we close through this, then this is gonna generally just give us a little bit more slowdown. Same thing here. I was watching the Dow Jones produce that SMT here, which you guys saw pan out on the fractal model. So could be slowing it down a little bit. Well, if you level up inside the Discord, I believe that you can already claim it random at your operative level 4. It's either operative level 4 or 5. You can visit the XP channel and check out the rewards. Felipe, I really appreciate you saying that. Let's see what Dow does here. It looks like Dow is going to give the closure here, given the price action, and NASDAQ and ES are just still being resilient. Any other questions here? Tope, are you meaning gold? Is that what you meant to type? Yeah. So it starts at 820. Gold opening range is at 820. Yeah, we can check gold. I've already made this very abundantly clear. Like, I'm not a good gold trader. I know there's definitely some gold traders out there that are good and they make a killing with it, but I am not a good gold trader. I've made that very explicitly known. So basically just trade underneath this. And this is the gold opening range breakout as well. I would not have looked at taking this because our weekly opens all the way down here. And if we're above 30-second opening range and the weekly open, then I like longs, but you see how this is conflicting with the weekly open. So I personally wouldn't have taken this. But yeah, still there. You have an inversion plus the opening range. It's nice. All right. It's interesting. This is so close to the weekly open. I'd be very surprised if we don't reach that. But yeah, that's pretty much what we got. I'm gonna check the chat one more time. See if anyone has any questions. Said your explanations were quite insightful. I appreciate that. It sounds good, Mario, and Topo sounds good as well. Last call for questions. Go once. No problem, random. Felipe, see you around as well. Appreciate it. Much love, Forge. Wishing all well with you. Yeah, that's a continuation trade. Rennie. You can see the 50% here. 50% here. So ES again, a little bit more clear to me. But yeah, still have already reached that distribution. So typically speaking, any longs that occur inside of here, in my opinion, aren't the most favorable for risk reward. But you can see that ES still has plenty of room to just reach its first target. So again, this is why I personally liked ES a little bit better today. And it's not always going to be like that. It's just some of the signatures that I like to see. Do ITTE. Appreciate that. It's been fun today. It's a beautiful respect on C4. I love T-Trades. A legend. And there's that target. on NASDAQ. So you guys can see I basically just measure the distance from opening range to opening range, close above this, sponsored this fair value gap, and this is the first target. There's a lot of things, Mario. It first comes down to relative strength. So I want to see like what pairs are stronger, right? And that's one of the first things I look for asset selection. And then also the same way I talked to you guys about the opening range, like which one has a more favorable opening range and where it's being placed, right? So if this is being placed above the previous day and it's also in line with my bias, then I personally like that better. And asset selection is not always the easiest. Um, Definitely be very honest about that. It just takes a lot of screen time. And you can see already there's further SMT that's happening here. So ES is being more stubborn now relative to NASDAQ. So it's just something that you gotta also just be aware of, that not every single signature you're gonna see or call is gonna work out. Like I would have wanted this to make a higher high, but again, I don't make the market, so. And we also have a C2. It's against this, so until we go 50% above this order block, it's basically just going to consolidate slash retrace. So here's that Dow where I basically did say that if we didn't test the weekly open, I'd be very surprised. And there you go. So 9:30, we did mention this 100%. So one of the assets would be taking that weekly open. And you can see that happening. Interesting. Right. That's a good question. So once the open is taken, you expect price to continue on NQ and ES and reverse at least a little for YM. So on this, you can see there's a clear imbalance that basically got taken after we rated the current day high. And this inversion was, again, it happened to be so close to the weekly open that, again, on a one directional day, I was already anticipating one of the assets to trade to the weekly open. This being the weaker pair right out the gate from Asia made me more, like, I guess, favoring any short potential would have been, like, it's not a large range, so I'm not like trying to like parade about it, but basically from here, from the 50s to the 200s, basically still about 50 points on YM is what I would see basically for a short setup. Like I would never look to short NASDAQ or ES when they have these bullish signatures. So when we tap that weekly open, there's obviously again strength that's being displayed in underlying of relative price levels, and the order flow signatures that I'd still be looking for any of that to change haven't been presented. I don't know if that answers your question or not, but let me know. Okay, cool. Right on. Answered a lot of good questions today. I appreciate everybody interacting. If this was insightful to you and you would join another stream in the future, please let me know in the chat. It takes only a couple of seconds just to provide feedback, but providing feedback and seeing more people see it more insightful does motivate me to continue. I do like streaming a lot, and if you guys enjoy it, then it's beneficial for both of us to partake in it. If you guys don't necessarily enjoy it, and or if you think it's a little bit confusing, then just let me know, and I'm happy to take any kind of constructive feedback and look to adjust in the future. Awesome. What was your biggest takeaway you made? That's a really nice comment. I appreciate you saying that. Eastman, thank you. Trades for fun. Awesome. I appreciate it, Roxy. Yeah, if you guys want to let me know your biggest takeaway, then that'd also be pretty helpful to me so I can know that like what more or less you guys have seen the most insightful or what could have been a let's call it an interesting observation that you may have not seen before, then that's always really awesome to share as well. Now that I'm looking at it, I think I honestly put these targets wrong. This is supposed to be here. Integration of the different tools, awesome. Context is key. You can learn about Toodegrees XP here. It's a way that you guys can level up within our Discord for actively participating. And as you reach certain levels, you unlock certain tools, and you can also give gifts to other people that you know. That's insightful. I appreciate you sharing that, Ubaid. I think looking at a quad box is one of the very important things. If I didn't necessarily have that, then I don't think the level of analysis is really the same. Being able to compare assets and just seeing the overall context of time-based levels and liquidity is one of the four hearts. Like it's four hearts. I don't even know if that's really the word. It's like the four. It's like one of the first things I look for. Appreciate that, Ronnie. So let's see if they want to break this 50%. If we break 33 and 3/4, should start to see it pick up a little bit. Otherwise, it's still going to consolidate or retrace. Gorgeous delivery, though. Really nice delivery today. All right. So it's been fun. If you guys have any other questions, always feel free to tag me inside of the indices channel or the general chat, and we will always be there for you. So, yep, I'm going to end it here. I think it's been very, very good stream. A lot of insights. Don't need to overload any other further insights. And catch you guys on Friday and probably sooner inside of the elite chat. Later, everyone. Take it easy. We'll talk soon, okay? Good to see you, MABH. It's good to see you. All right. Bye now. Testing 1 2.